Alrighty guys, welcome back to another episode. I really want to talk about, is the stock market going to fall? There's been a lot of volatility among pretty much Wall Street. A lot of stocks, ETFs have been absolutely slammed. And a lot of beginner investors are really asking this main question is the stock market going to fall? Should you be concerned about it? Well, let's look at the S&P 500 and then let's look at some other ETFs here. So right here is the S&P 500 ETF. So you guys can see this represents really the top 500 companies in the market in the United States, weighted by market cap. And you guys can see over the past, look at the chart, over the past 180 days, we've had a beautiful upward trend. Okay. Yeah, there's some resistance in here, but not much because this is really just an ETF that on average gets around a 9.8% return every year. It's something you don't really have to worry about. Okay. And you guys can see of all these little ups and downs, but historically this goes up in value. Okay. So looking at it, you guys can see this yellow line here. This yellow line represents the 200-day moving average line. So it really represents the closing prices of the past 200 days merged together to form this line. So this line represents a couple of things. The first thing is you can look at it and really instantly know the overall direction of this ETF. So you look at it, upward trend. The next thing this represents is a support or resistance. So you guys can see when the stock or ETF is above it, it has a tendency to use it as support. You guys can see it comes in buying pressure, buying pressure, buying pressure. And now look at this. Okay, it's hit it. And yes, we did get a little bit of some consolidation, but the reason why I want to say this is because look at all this volatility in the past couple of days. Really, this ETF went from 392 all the way to 381. So with that being said, this is like buying this ETF a month ago. So what I'm trying to say is this volatility is very normal among stocks. It's very common to see stocks go up and down. You just want to play the long game. If you try to time it, you're going to lose the game. You should use these opportunities to buy now. Really, because you never want to buy at these highs. That doesn't make sense. You want to buy when it falls. And historically, when you buy when it falls, you do very, very well. You can dollar cost average this ETF extremely well. But one thing that a lot of people are been worrying about is tech stocks. But so S&P 500, you don't have to worry about it. I'm telling you right now, this will just recover. You guys can see this dip is nothing compared to what we've seen in the past. Okay, let's look at QQQ. Now, this one is a little different. This represents a lot of the tech stocks. And lately, you guys can see this has been hit very, very hard. But historically, instead of around a 9.8% return, this gets on average around a 15% return. And from the highs, this ETF has sold off more than 8%. So what does that mean, Carter? What does that mean? Well, first of all, this is like buying this ETF well over 2 months ago. So for me, that's fantastic, because now I'm not buying when this thing's super expensive. I'm buying now when it's a lot more affordable so I can get in, or if I already have some, I can average my shares down. Phenomenal. Okay, what does this mean? This brings opportunity. Number two, yes, it is breaking down of this 200 moving average line. So you guys can see it's really broke through it and then it hit it as some overall resistance. You guys can see it's hit it and then we did get some sell off again. So right now, the 200 moving average line is acting as resistance, just so you guys know. So it's going to have a little bit of a harder time breaking above it. So looking at it, old support has a tendency to act as new resistance. So this old support is now acting as new resistance. This is basic technical analysis. So the moral of this story is QQQ definitely does carry a little more risk than probably the S&P 500 right now. It's a little more volatile, but it has a higher return rate, which is phenomenal for the long term because I really believe we're just getting started on tech, and I really think there's so much long-term potential. So with that being said, there's been multiple stocks like Apple, AAPL, that have been hit very hard. From the highs, Apple has sold off, look at this, more than 17%. So this brings a ton of opportunity. So you're pretty much buying this over about 3 months ago, which is amazing. It really is. So there's a lot of potential here. And another awesome thing is Apple just announced a dividend increase. So it's going to be phenomenal for growth investors because Apple is pretty much a growth stock. Number two, now it's really amping up their dividend game so you can start counting on a higher income stream. I really think that's phenomenal for a lot of investors here. But you guys can see Apple is a little more volatile than a lot of these ETFs. So the moral of this video is don't worry, play the long game, and you guys will just be fine. You know, as long as you guys stay away from companies like GME, you guys can see it went up and sold off pretty big time this afternoon. You guys can see it did get a lot of buying pressure all the way up to highs here at around 185, sold off all the way down to 100. As long as you guys stay away from companies like this for the long game, you guys will be just fine, and it's really nothing to be worried about, I promise.